Hi there traders, this is Steve Miley for FX Explained and another one of our weekly MacroWatch roundups of all the geopolitical and macroeconomic news that's impacted the market here for the first week of December and looking ahead to the week commencing the 9th of December 2019. Well, markets very much went from a risk off and then back to a risk on theme over the past week in here, and primarily driven initially by the US-China trade talks in here, with rumours coming out from both sides, primarily from the US, that maybe any signing of a phase one trade deal could be delayed, with President Trump actually saying at one point that a trade deal might not be done until after the next presidential election. And remember, that's out in November 2020. So that spooked markets, and when markets went lower, alongside that, we also had the US putting tariffs back on aluminium and steel from Brazil and Argentinian imports of those commodities, aluminium and steel, reinstating those tariffs. That, alongside the negative prospects for the US-China trade deal, spooked markets lower, with equity markets selling off, and then risky assets selling off, and then a strengthening of the safe haven assets, the Japanese yen going higher, that's dollar yen lower, and gold also going higher, with US and global stock indices pushing lower. But then we got a significant rebound into the second half of the week. First of all, President Trump kind of reining back on what he'd said previously, saying that trade negotiations were going well. And at the very end of the week, then we had the US employment report featuring the always much watched non-farm payroll segment, which was expected for November to add in 187,000 jobs, with 266,000 jobs added in. Also, the unemployment rate nudged back to 3.5%, matching the lowest jobless rate since 1969. This benefited riskier assets and saw riskier assets shoot back higher, and so equity markets rebounding strongly into the end of last week, having started off for the first couple of days of last week very negative. Elsewhere, we had the UK election polls continued as we go into election day coming into this week on Thursday the 12th of December. We had a slightly more positive tone for the Conservative Party in here from the opinion polls, which sent the pound racing higher, cable breaking above the important 130 level, that's the pound to the US dollar, to a 7-month high, whilst the euro versus the pound went down to its lowest point for over 2.5 years. The FTSE 100 index has underperformed the other European and US equity markets on the back of this, with the pound strength weighing on the FTSE 100 index. We also had the Bank of Canada interest rate decision in the middle of the week on Wednesday last week, leaving their interest rates unchanged as expected, but with a more upbeat outlook than the markets had been anticipating for the global economy. And this sent then the Canadian dollar stronger, which saw USD CAD dollar, Canadian dollar lower. The more positive tone for the Canadian dollar, however, was somewhat reversed on Friday after the release of both the Canadian and US employment reports. Back in the US, the impeachment inquiry has reached its expected conclusion, with the House of Representatives Speaker Nancy Pelosi recommending that articles of impeachment are drafted against President Trump. Again, the impact on markets was fairly muted in here, and it's not expected that the Republican-controlled Senate will vote with the required 2/3 majority to impeach and remove the president. So hence markets not really reacting to that too much this week. The last 2 days of the trading week last week, Thursday and Friday, saw the OPEC and OPEC Plus meetings, where OPEC and OPEC Plus agreed for still deeper production cuts of an additional 500,000 barrels per day, 500,000 barrels per day, additional cuts, bringing the total cuts to 1.7 million barrels per day, which is due to expire in March 2020, which saw the oil price spike higher, moving to near 3-month highs. Let's take a look ahead to this week, and the main thing we have to look forward to this week in the early part of the week is going to be on Wednesday, really, when we have the US Federal Reserve, their last meeting of the year. No change in interest rates expected, but it will be very interesting to see if the more dovish tone is removed and if the Fed shifts back to a more hawkish tone after that very positive employment report. And then on Thursday, we get Christine Lagarde's first meeting as European Central Bank President, at which no change is expected. But will she set a different tone to what we've seen from Mario Draghi? The expectation is to move away from implications of more negative interest rates. And probably the most important event of the week in here, we get the UK general election on Thursday, with results expected very late Thursday night going into early Friday morning. Let's look at the data elsewhere. Monday, Chinese trade data alongside Japanese GDP. On Tuesday, we get Chinese CPI, UK GDP manufacturing industrial production alongside the German ZEW survey. US CPI comes on Wednesday along with the Fed interest rate decision, and then the ECB interest rate decision Thursday and the UK general election. And then finally on Friday, we get US retail sales. So that's it for the week. I'm going to wish all our followers on YouTube and on the website a great trading week. Have a great trading week out there. Could be interesting today as we've shifted into this week, as we've shifted to more of that risk on theme. So I'm going to wish you good luck out there. Lots to look out for, including the Fed, the ECB and the UK general election. Have a great trading week, and don't forget to catch us on our next Macro Watch. So traders, don't forget to catch us on the next FX Explained Macro Watch and all the great content on fxexplained.co.uk.